Gautam Adani and the Adani Group have received temporary relief after SEBI, India's market regulator, issued a clean chit on allegations of insider trading, stock manipulation, and related party transaction violations raised by the Hindenburg Research report. The Supreme Court also backed SEBI's independent probe, further strengthening Adani's position, even as doubt lingered over the probe's thoroughness and transparency. For months, serious questions loomed over Adani Group's business practices after Hindenburg's revelations, which accused the company of illegal activities aimed at gaining unfair market advantages. SEBI's report, however, did not conclusively address all critical issues raised, particularly those involving opaque offshore entities, concentrated stakes by foreign portfolio investors, and whether public shares were truly held by the public or quietly controlled by insiders. It is clear that while SEBI dismissed major allegations, deep scars remain regarding public trust and market confidence, cornerstones for any business entity. The regulator itself largely sidestepped key aspects, leaving the central questions essentially unanswered. What is the Hindenburg Report and Adani crossfire? The Hindenburg Report accused the Adani Group, one of India's largest conglomerates, of stock manipulation, accounting fraud, and improper use of offshore tax havens to inflate share prices and conceal debt. It explicitly claimed Adani used shell companies in Mauritius and the UAE for money laundering, corruption, and siphoning funds. Hindenburg's findings included 88 pointed questions, highlighting concerns around extensive debt, opaque transactions, and inconsistent disclosures. Adani Group's response and SEBI's clean chit. The Adani Group instantly dismissed the allegations as baseless, malicious, and politically motivated, claiming the report was a calculated attack on India's economic interests. SEBI's recent orders supported Adani's defense, declaring that investigated transactions were regular commercial operations and did not amount to related party dealings or market manipulation under the rules then in force. All loans were reportedly repaid in full, with no evidence of fund diversion, and no loss to investors was found. However, critically, SEBI's orders did not address some of Hindenburg's core claims, like violations of minimum public shareholding norms, whether public shares were actually under Adani's control via obscure offshore vehicles, and the true nature and transparency of foreign portfolio investments with high stakes in Adani companies. Multiple courts and external auditors, based on available evidence and the limited regulatory scope, found no substance in most of Hindenburg's fraud allegations. Yet the regulatory silence on some of the most problematic issues leaves gray areas that demand further light. Are all allegations cleared? In America, despite regulatory dismissals in India, Adani Group faces other serious allegations in U.S. courts, specifically, accusations of paying more than $250 million in bribes to Indian officials related to solar energy contracts, which are now being probed by U.S. authorities under the Foreign Corrupt Practices Act, FCPA. A SEBI clean chit does not offer any protection to Gautam Adani in the United States, nor does it shield him from possible arrest if U.S. authorities issue warrants. As of now, there is no public evidence of such a warrant. SEBI did not answer the bribery and FCPA-related charges as they are outteased its regulatory preview. It neither resolves the concerns of minimum public shareholding, suspicious FPI, etc., leaving significant gaps in the investigation. And finally, the multi-million-dollar question. Will Adani face legal risk if he visits the U.S.? That remains open. India and the U.S. have an extradition treaty, but current records show no public arrest warrant for Adani. Finally, what should be India's stake? It is an unfortunate reality that the rapid expansion of Adani Group as a global business giant has triggered anxiety among several international competitors and interest groups eager to disrupt its growth. The Indian government is well aware of these dynamics, making it imperative to ensure that strategic business entities receive reasonable protection from targeted external pressures and potentially orchestrated campaigns, which can often threaten national economic interests. However, incomplete answers from SEBI and its limited response to crucial aspects of the Hindenburg allegations not only leave Adani's reputation in uncertainty but risk undermining broader investor faith in India's markets and regulatory credibility. The trust gap that remains is not just Adani's issue. It can affect the confidence of global investors considering India as a safe and transparent destination for capital. Ultimately, for Adani Group, Regaining trust means openly demonstrating that its evolution and successes have been earned through genuine business practices and full compliance with both domestic and international financial standards. India's future growth prospects rest heavily on the strength, integrity, and credibility of major business groups like Adani, and only transparent accountability, rather than regulatory silence, will protect those prospects in the long